Deirdre Bosa looks at the global race to rule AI in today's Tech Check. Deirdre?
Hey, Kelly. So here's the bottom line. China's out. The Middle East is in terms of chip diplomacy, which is only gaining greater significance in this sort of geopolitical environment. And so this week, it could open the door to multi-billion-dollar deals in a region that is very eager to replace Beijing as the next big buyer. Among the names expected in the Gulf this week, Elon Musk, Jensen Huang, Ruth Porat, Alex Karp. They're on the agenda for the Saudi-U.S. investment forum in Riyadh. Sam Altman, Mark Zuckerberg, they're also reportedly going. Now, for Gulf nations, this is a chance to secure the chips and the partnerships needed to get into the AI power race for U.S. tech and the Trump administration. It's access to sovereign wealth, cheap energy, and potentially a new front in the AI trade. But access does come with a price. The Biden administration had warned that loosening controls could shift AI infrastructure and influence outside U.S. allies. They were wary of autocratic regimes with ties to China. And they were worried that U.S. chips could end up strengthening Beijing indirectly. So, Kelly, if those guardrails are going to come down, which people close to the Trump administration, like AI czar David Sachs, they're now arguing for, there could be a trade-off here. Short-term deals in exchange for longer-term strategic risk and things like the AI diffusion rule, which we've talked a lot about. They're at stake here and could sort of represent a new order with, again, chips as the bargaining chip, as the leverage.
Not to be dense, but elaborate on the AI diffusion rule again for a moment. And I'm very curious. I mean, what kinds of announcements then could we expect or might we get in the wake of these meetings?
So the AI diffusion rule is a Biden-era rule that said there was basically 3 tiers of countries who can or cannot buy U.S.-made AI chips, advanced chips. So you have our friends, then you have our enemies,
right,
or people that we don't want to sell to, like China, and then someone in the middle, like many Middle Eastern companies that we want to be careful with or limit how many they can sell because they have ties to China or some of the countries that are not exactly on the ally side. So that was taken away. We know that the Trump administration is not going to go ahead with that. We don't know what replaces it, but there had been a lot of discussion that it would be on a country-by-country basis, which would certainly track with what we could see this week, right? We could see these country-by-country rules, you know, the UAE or Saudi Arabia buying X billion dollars worth of AI chips. And that would be sort of something that would replace that previous diffusion rule. And again, in chip diplomacy, right? This is so important because you need chips to lead in AI, to build out the infrastructure. Middle East has plenty of power. With chips, they could really, you know, gain an advantage in this sort of global race.
And yet I'm sure they're trying to kind of strike this balance of, okay, well, where are those chips? What is the end goal? Who, you know, Dubai, for instance, which sees itself as like the Switzerland, right? It's neutral with its partnerships with all other nations. If we open up to Dubai, is it effectively opening up to China and so on and so forth?
Exactly. And that's what the Biden administration was worried about. But we know from the first Trump administration, too, that there is a cozier relationship with the Middle East.
All right. Deirdre.
Over the last several years, NVIDIA's stock has surged following each of its first quarter results announcements. The stock's current valuation is nearly identical to its May 2024 and May 2023 forward PE levels. The biggest clients of NVIDIA have stated that their ambitions to invest in AI infrastructure remain on course. Although history seldom repeats itself, it frequently rhymes. Consequently, investors can use previous events as a predictor of potential future events. In light of this, a trend regarding NVIDIA stock appears to be emerging. In each of the previous years, it has had significant price increases in May, and the current configuration of the stock is similar to its appearance before to those two spikes. That might indicate that investors should purchase it right now. Graphics processing units, GPUs, manufactured by NVIDIA, are excellent tools for anyone wishing to carry out the kinds of computing tasks that can profit greatly from a large amount of parallel processing power. These tasks include training artificial intelligence, AI models, and displaying high-resolution video game graphics for which GPUs were initially created. Early in 2023, as the rush to construct data centers that could host AI software began, demand for GPUs skyrocketed. This caused NVIDIA's stock price to soar in late May of that year, following the company's release of its fiscal 2024 first quarter earnings and its exceptional fiscal Q2 guidance. Let's go ahead to May 2024. The market wasn't sure if NVIDIA could maintain its growth rates after the company had already reported amazing results for a whole year. But it produced yet another strong fiscal Q1 report, which caused the stock to rise. We're witnessing a similar situation in May 2025. Investors are concerned that NVIDIA won't be able to maintain the kind of growth they've grown used to. But this time, their worries are fueled by things like tariffs imposed by President Donald Trump and worries about an impending recession in the U.S. economy. As a result, it is trading at a forward price-to-earnings ratio close to 26 and is approaching that quarterly report well below its all-time high. During the previous 2 Mays, NVIDIA was trading at a forward PE that was nearly identical. However, the company often begins trading in the mid-30s to mid-40s range after announcing strong Q1 growth and providing a positive view for the remainder of the year. As long as there are no unforeseen announcements or revelations on new obstacles, I'm very confident that NVIDIA will see a significant share price jump following its fiscal Q1 report on May 28th because the current setting is almost the same as it has been for the last 2 years. The U.S. government's decision to restrict which high-end processors can be transferred to China was one obstacle that NVIDIA faced in the first quarter of this year. NVIDIA had to take a $5.5 billion write-down this quarter due to changes in export regulations, which will have an impact on its Q1 profitability. Additionally, those export restrictions may hinder future demand. However, despite the growing macroeconomic headwinds brought on by Trump's tariffs, AI hyperscalers stated in their own recent Q1 results that they haven't altered their large capital spending plans for data centers primarily targeted toward AI. With the tens of billions of dollars they want to invest in cloud infrastructure expansions, NVIDIA should be able to grow to the point where its current valuation is justified and beyond. According to NVIDIA, data center capital expenditures will increase from approximately $400 billion in 2024 to $1 trillion annually by 2028. NVIDIA's stock should still have a lot of long-term upside if that proves to be the case. However, following its May 28th earnings release, NVIDIA's stock might be ready for a significant jump in the near future. In light of this, purchasing shares at their current relatively low valuation appears to be a profitable strategy. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
President Trump kicking off the first major international trip of his second term today, expected to visit Saudi Arabia, Qatar, and the UAE, as top tech CEOs also head to the region for an investor conference. Our Deirdre Bosa digs into that for today's Tech Check. Morning, Dee.
Hey, good morning, Carl. Chips are the new diplomatic currency, so it only makes sense that tech and AI are also in tow this week, including some of the biggest names in the space. Jensen Huang, Ruth Porat, Alex Karp. They are on the agenda for the Saudi-U.S. Investment Forum in Riyadh. You've also got Sam Altman, Elon Musk, Mark Zuckerberg also reportedly will be there. Now, why? For Gulf nations, this is a chance to secure the chips and partnerships needed to get into the AI power race, bring the next computing revolution to their own borders. For U.S. tech and for the Trump administration, it's access to sovereign wealth, cheap energy, and a new front in the AI trade just as China is catching up and just as export bans shut out NVIDIA and others. Now, put another way, the Middle East could open the door to multi-billion-dollar deals in a region that is eager to replace Beijing as the next big buyer, and that could be a catalyst for the trade itself. This is also a return to familiar territory. During Trump's first term, he forged close ties with Gulf leaders, celebrated Saudi investments. He's now bringing that same approach to AI with chips as the new golden ticket. Now, Gulf states, they have already offered the president trillions of dollars in promised investments, $600 billion from Saudi Arabia over the next 4 years, $1.4 trillion from the UAE over the next decade, including in AI and semis. But that access does come with a price. The Biden administration warned that loosening controls could shift AI infrastructure and influence outside U.S. allies. They were wary of autocratic regimes with ties to China and worried that U.S. chips could end up strengthening Beijing indirectly. We've certainly seen that in the Southeast Asian region. Now, if guardrails do come down, which people close to Trump like AI czar David Sachs, they're now arguing for, there could be a trade-off here. Short-term deals in exchange for longer-term strategic risk. That's all going to be on display this week, guys.
Do we have a sense, Deirdre, of what China is doing about all this? If, all of these tech CEOs are going to Saudi Arabia, I mean, does China have a similar confab where their big tech CEOs and executives also go to Saudi?
Well, China is basically looking internally, right, which they have been doing for years. They're building up their own AI champions and giants, and they're trying to get pickup from companies and capital in the Middle East. So Huawei, right, is a name that comes up time and time again. The idea that everything that the U.S. has done to sort of contain American tech in China has actually helped boost some of their own companies. So Huawei is building their own chips. They're building their own infrastructure. They become a cloud giant. They're getting closer and closer to actually competing with our own chip giants. And they could be looking as well to the Middle East to sell some of this stuff. Right now, of course, the U.S. is still seen as so much farther ahead. And that's why, chips have become this bargaining power. It's not difficult for President Trump and for these companies to sell their chips in a place like the Middle East because demand is just so red hot if China is not going to do it. But be rest assured, China is working on its own end to try and build up its own national AI champions.
Yeah, I can imagine they're not ignoring this. Deirdre, thank you so much.
Recently, NVIDIA has been among the most sought stocks. As a result, you might want to think about some of the major variables that might affect the stock's performance soon. Shares of this manufacturer of AI and gaming graphics chips have increased by plus 5.2% over the last month, while the S&P 500 composite has increased by plus 3.8%. NVIDIA is part of the semiconductor general industry, which has increased by 2% during this time. Now, the most important question is, where might the stock go in the future? The buy and hold choice is always dominated by certain basic facts, even when news reports or speculations regarding a significant shift in a company's business prospects typically cause its stock to trend and cause an instant price change. It is anticipated that NVIDIA will report earnings of $88 per share for the current quarter, which would represent a change of plus 44.3% from the same period last year. Over the past 30 days, the consensus estimate has changed by 3.3%. The consensus profits forecast of $4.29 for the current fiscal year indicates a change of plus 43.5% from the previous year. This estimate has changed 2.1% in the past 30 days. The consensus profits estimate of $5.44 for the upcoming fiscal year is a change of plus 26.8%. from NVIDIA's estimated earnings 1 year prior. The estimate has changed 0.7% in the last month. Our patented stock grading tool, which has an exceptional externally audited track record, effectively leverages the power of earnings estimate revisions to provide a more definitive signal of a stock's near-term price performance. NVIDIA has been ranked number 3, hold, due to the magnitude of the most recent shift in the consensus estimate, as well as 3 additional earnings estimation-related variables. The evolution of the company's forward 12-month consensus EPS estimate is depicted in the figure below. Nothing much happens if a company is unable to increase its revenues, even if its earnings growth is likely the best sign of its financial health. For extended durations, it is nearly impossible for a business to increase its profits without increasing its revenue. Thus, it is essential to understand a company's potential for revenue growth. The $42.71 billion consensus sales forecast for the current quarter for NVIDIA is a plus 64% year-over-year change. Estimates of $194.17 billion and $240.53 billion for the current and upcoming fiscal years show changes of plus 48.8% and plus 23.9% respectively. In the most recent quarter, NVIDIA recorded $39.33 billion in revenue, a plus 77.9% year-over-year improvement. EPS of $0.89 for the same time period is higher than $0.52s for the same period last year. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video.
I want to get back to the 90-day tariff pause with China. Listen to what Commerce Secretary Howard Lutnick had to say about the negotiations. Roll it.
This is just a China problem right now, right? We have 145% tariff. They have 125% tariff. Those tariffs are too high to do business. But that's why they're talking right now. The rest of the world is 10%. So don't overdo it. The rest of the world is 10%. They're sending their goods here, as the president has said time and time again. We are the consumer of the world. Everybody wants to sell their goods here, so they need to do business with America, and we're using the power of our economy to open their economy to our exporters.
All right, we got a deal. Michael Pillsbury joins me. He's a China expert. Michael, you've seen the deal. Both sides dropped tariffs by 115%. Right. Is this a good deal for America?
This is a major breakthrough, Stuart. You know, I've been pessimistic at different times in the first term of President Trump. What's happened this time, if you want to go behind the scenes, what you have is two professionals, Ambassador Greer, Vice Premier He. They know the details of what went wrong and what happened in the first term, phase one agreement. And they've got a temporary ceasefire negotiated here for 90 days. And Stuart, the most important thing by far, this is a joint statement. It's not each side giving a different interpretation of what happened. It's a joint signed statement. This almost never happens with China. It's a huge victory for President Trump. I think he's behind this. He knows how to instruct his negotiators. And with this 90-day pause is a kind of ceasefire, if you will, and what could have been a global trade war with the global recession in the wings. So it's quite a breakthrough. And I think we should give full credit to President Trump for what he's done.
Now, tell me the state of China's economy, because it appears to be not in great shape, and maybe President Trump exploited their vulnerability. What do you say?
I think that, Stuart, yes, you're right. I think that's part of it. The state TV in China for the last two or 3 weeks has been showing just all kinds of catastrophes, container ships piled up, ships being turned around before they go to America, people unemployed, demonstrations going on. So yes, that's been happening, but that's not the reason for the breakthrough. The reason for the breakthrough is when you get two professionals like Greer and Vice Premier He alone, in essence, for 2 days in Geneva. It's like white smoke coming up at the papal conclave, Stuart. Something really miraculous has happened here. But now we have 90 days to get it right and make it permanent. That's going to be the hard part next.
Well, it's a signed joint statement, and I understand that is a big deal. But can you trust Xi Jinping to implement everything that's on that piece of paper?
No. That's why the 90-day limit is so clever. It means in 90 days, we have to find ways to have enforcement language put in and also find out, will the Chinese for sure abide by the phase one agreement of January 15, 2020? That I noticed that's not in the statement. So China can continue to not honor the deal 5 years ago, but that's got to be locked in, Stuart, that the old agreement is still binding and the Chinese accept that. That's what I'd like to see coming very soon.
What do you make of, as this trade deal was being negotiated, Xi Jinping was in Moscow with Putin for the Russia's Victory Day celebration? What's the significance of that? Putin and Xi Jinping getting together as their delegates doing a trade deal with America.
Right. Well, it's our strategic nightmare that there be a true Russian-Chinese alliance. They're a long way from that now. But this kind of visit means that Xi Jinping is still supporting Putin and the Ukraine terms that Putin is offering. China has its own peace plan for Ukraine. It's got about 30 countries that back it. It hasn't really come off the fence either way. But this kind of trip suggests that Xi Jinping is still supporting Russia in its war in Ukraine. That's got to be addressed as well in the future.
But this is a win for President Trump with this trade deal with China. Last word to you, Michael.
Very much. Very much.
Okay, we'll take those last words. We'll take it.
The reported revenues are a surprise of plus 4.26% when compared to the consensus estimate of $37.72 billion, while 5.95% was the EPS surprise. In the last 4 quarters, the company has exceeded consensus EPS projections. During this time, the company consistently exceeded consensus revenue projections. Without taking a stock's valuation into account, no investing choice can be effective. One of the key factors influencing a stock's future price performance is whether or not its current price accurately represents the underlying business's intrinsic value and its growth prospects. It is possible to determine whether a company's stock is fairly valued, overvalued, or undervalued by comparing the current value of its valuation multiples, such as price to earnings, PE, price to sales, PS, and price to cash flow, PCF, to its own historical values. Additionally, comparing the company to its peers on these metrics provides a good sense of how reasonable its stock price is. After U.S. regulators successfully rejected its H20 AI chip without an export license, NVIDIA is attempting to maintain its hold on the Chinese market. According to reports, the chipmaker is preparing a downgraded version that will be released by July and will have a much lower memory capacity in order to comply with the new U.S. regulations. China continues to be a crucial market for NVIDIA despite the changes. On his last trip to Beijing, CEO Jensen Huang emphasized the company's $17 billion sales for the fiscal year that ended on January 26th. As U.S.-China tech tensions increased earlier this year, major Chinese companies including Tencent, Alibaba, and ByteDance increased their H20 orders in search of affordable AI solutions. Despite apparently securing $18 billion in orders for the H20 since January, NVIDIA is now forced to change course due to the new limits. Although details are still unknown, sources suggest that consumers may change module configurations to get additional performance out of the redesigned chip. NVIDIA has not yet responded, and neither has the U.S. Commerce Department. NVIDIA is walking a tightrope between maintaining market share in one of its most lucrative regions and complying with regulations, so the stakes could not be greater. Investors will be closely observing how the redesigned H20 chip is received and whether NVIDIA can sustain its AI goals in a business that is both a cash cow and a geopolitically sensitive market as geopolitical dangers increase. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Look at this, Kevin Green, a different kind of morning, right?
Yeah, different kind of morning here. You have, 80% of the stocks in the S&P 500 in the green so far. The sectors are looking pretty healthy. We only have one that's Dow, that's consumer staples. Really not surprising. That's a little bit more of a defensive sector. You are seeing more risk on, especially when you're looking at the Mag 7 stocks. You kind of talked about it earlier here. You're seeing a lot of outperformance when it comes to the Mag 7 compared to the broader index for now, which is also fairly good here. You also have the Russell that is also outperforming there. A little bit more of optimism here for the market. Now, where we open here today, Nicole, is actually going to be very interesting. If we kind of look at the daily chart here, the 5830 area is something that I've been keeping on the radar here for this morning because it's above this final resistance level when we look at these channels. If we kind of go back over the last 3 months, 4 months, we had this initial channel that took place, and then we actually saw another breakdown in another channel that actually took place. This is the primary one that we are breaking above right now. That's going to be an area of resistance. As you talked about, do we actually sell into the strength? That could be actually the case here. We've had a really good performance right now, but we might be seeing some chips being taken off the table. We do have that 200-day moving average, which we broke above, sitting at 5750, kind of closely aligning with that upper end of resistance right now as well here. So I think today you want to be able to hold on to these gains as much as we possibly can. You do not want to really see any type of fade or any type of retest of that 200-day moving average and sustain over these levels for the next week or 2 weeks. I think that would be ultimately bullish. You'll probably see also some re-ratings when it comes to analyst expectations for the S&P 500 year-end target. If we're looking at the intraday chart, 5,900 to the upside, seeing some call selling flows there, and you're actually seeing some flows at the 5,940 level as well. So we'll be mindful of that. But 5,900 could be your really big area of resistance for the market so far here. If we break down 5,800, looking at some buyers potentially trying to step in here, you would like to hold that. Anything that we break down further, 5,775. If we go below 5,775, that's where it gets a little bit dicey to the downside here today. But overall, really good picture when you're looking at the equity market. You just want to be able to hold these gains, continue this enthusiasm, and hopefully the commentary coming from the White House continues to provide, once again, bullish sentiment creeping back into the market here.
Yeah, and I mean, today's moves here, we're at the highest level in a couple of months for the S&P 500. The NASDAQ goes back to the highest levels since February. You're watching oil, gold, soybeans, all of these things that are related to today's action. Why don't you start with your oil chart? We want to check out what you're thinking.
Yeah, so this oil chart, we actually looked at this last week and just getting a little bit of an update. We talked about these really big moving averages, these anchored volume weighted average price levels here. We actually have a 3-day our 3-month daily chart, we have from the lows, that average, that purple line that has been broken through now. We also have from the highs that we had back in April 1st, we're also breaking through that area of resistance, and the 20-period moving average, we're breaking above that as well. You want to be able to close above these levels here or keep these gains if you are an oil bull right now. And the next big area of resistance is going to be that $65 level. A lot of energy analysts have been focusing on $65 as that gauge of economic slowing being priced into the market, or are we just seeing aggressive selling just because of not only because of the economic slowing narrative, but also because of the increase in potential production from OPEC plus, even though the narrative there has been a little bit murky. So a decent little bounce off of the lows here, Nicole, for oil. Let's see if we can continue to have some follow through. The MACD does look bullish so far. Volume has not really complemented this up move yet, but hopefully that actually does kind of take place here in the near term. And then we're kind of looking at gold. We have this breakdown, risk on sentiment. You're starting to see some sellers coming into gold. Not surprising here by any stretch. We also have some breakdowns when it comes to the technicals for gold as well. The CCI officially now kind of providing that bearish trigger to the downside. This is a 3-year weekly chart, and MACD looks like it wants to hinge. Anytime that we actually have this breakdown for the CCI crossing around these levels, we actually do see gold coming and hitting that 20-week moving average or getting fairly close. We only had one time where it was within about 0.5%, but you could look at a potential pullback here. That doesn't mean that everything, sell gold and it's never going to go up again, but this might be the signal of a consolidation period hitting the market. And then the last thing is soybeans. That's a huge export good for the United States. And China has, since basically the Trump 1.0 tariff battle and trade war, has really kind of weaned itself away from the United States, continues to increase its purchases from Brazil and Argentina. Soybeans could be on the table here as far as a deal. And that could actually not only just kind of break this consolidation formation, kind of 2 cup and handle patterns as testing the neckline here right now, but this also could wash out some of the short sellers within this market. Now, the inventory levels for soybeans in the United States is really healthy right now. Global landscape actually looks fairly healthy. We do have a WASD report that's going to give us an update on the projections for end of year targets for this year. This one is the one to keep on the radar. In Trump 1.0, once they came up to a deal, soybeans rallied really aggressively here. This is an input good. I wouldn't be concerned about it when it comes to inflation, but I know a lot of farmers that really want to see this breakout from this 1070 level to the upside, try to get above that 1200 level that we've seen, around June of last year. So interesting chart. This is going to be a tariff watch and a trade war and trade deal commodity that we have to keep on the radar here.
All right, I'm going to, we're out of time, but the VIX is below 20. We haven't seen that in some time.
Yeah, it is crushing here. You would think it would actually crush a little bit more aggressively, but it hasn't, but it continues to inch to the downside. I'm actually looking at the VVIX, which is actually getting very close to very oversold areas here. So we have bullishness in the market. Volatility is really showing that. But if you have, if you wanted to protect a portfolio right now, Nicole, it's relatively cheap to do so, not only in the SPX options, the SPY options, but also utilizing VIX options or VIX futures here. Once it gets down to around that 90 level for VVIX, that's where it can actually re-rate fairly aggressively higher here. And that would be, once again, another signal that we might be getting closer to an area of resistance. Doesn't mean we make new lows, but maybe a pullback could be on the radar here. We're not at that level yet, but volatility has definitely crushed here. And you probably do not want to see volatility getting to that 16 handle if you're an intraday trader, because that makes it very difficult to be able to trade those markets.